All right, welcome to Trendy Options. Tonight I want to talk about the infamous LIS. This means line in the sand. Line in the sand is simply I use it for futures only, okay? Not on equities. So if you're in the room and you notice on my chart I have some pink lines, those pink lines are programmed for the close of the day for everything. But manually, I put the LIS on our futures. Right now we are looking at the RTY, okay, E-mini Russell, and I want to show you how we do that. As trivial as it may sound, what we need to understand is what does it mean? What does LIS mean besides line in the sand, right? So the first thing we're going to do is we're going to make sure that we are on a 5-minute candle, okay? Then we're going to find the 5-minute candle, okay? And then we're going to find 1400, okay, which is right here. And then we're going to grab a price line. We're going to mark it. Then we're going to make it pink because I just like that color. Then I'm going to make it kind of thick so you can see it. Okay. So this is the LIS. All right. Currently, the futures are showing plus 70 on the E-mini Russell. Okay. So on the E-mini Russell, you're given an opportunity when you are above the LIS, okay? When you open up above the LIS, you're given the opportunity to go long again. Typically, the reason why you're able to go long is because candle formations form what we call a zone, okay? So in this instance, we can locate that zone right here. We have a drop base rally scenario, okay? A drop base rally scenario. I can identify this by simply using my zone or box here, okay? And what you want to do in here is when price decides to come down into here, we scalp to go long, and you're given that opportunity. Your stop can be below here. It could be, it's wherever your tolerance is, okay? Your tolerance. It could be right underneath the LIS, it could be down here, it could be down here. Just depends on you, okay? Now, if giving the opportunity, let's say the LIS is, say you open up below the LIS. So let's go over here to gold. Okay. Here we are on gold. Let's look for the same thing here. Let's go over to 1400. That's 1400 here in Colorado time. We're going to identify. Okay. Edit properties. We're going to make this that pretty color. Let's make it so you can see it. As you can see, the price opened up. It came directly to the LIS, giving you the opportunity to go long. So in this scenario, we'll start with 2 contracts. We're going to buy 2 contracts of gold to go long. We're above the LIS. We can use our stop below a zone. In this scenario, the zone is not the greatest, but what we have is we have a rally, base, base, and then some candles out. So, depending on you, you can put your stop below the LIS, okay, below this candle, or somewhere in between. It's up to you. It all depends on your risk tolerance. And mind you, you must understand how much each tick is worth. Okay? To the upside, what I'm looking for is a couple things. Trendy options we like to use different scenarios. We know that if we base, and if you watch the Fibonacci level, that our first target is the 50. In this case, we have scalped off of the LIS, and we are looking for price to move into 1270 and 1270.5. We can simply come over here, make sure this is changed to 1, and I'm going to sell my first at 1270, okay, if I wanted to. And I can sell my second one at 1270.5. So in this scenario, I'm going to go ahead and sell at different levels, here and here. If I were to keep both positions, then both these positions would pay me $160 to the 50 and to here. Okay, it's about right there. Right there. Okay, so that's what we're looking on there. Remember, we are above the LIS, so we go long. When we open below the LIS, we can go short for a scalp. If we use Fibonacci, and if we're only shooting for the 50, we can simply sell both here. Or maybe you're bullish on gold, okay, and you want to use the 50, and you want to use the 618 here. This is simply how you can set this up. And I can also put a stop wherever I choose to, depending on my tolerance. I like to have the P&L set up so that I understand if I take a loss here, I know what I'm looking for. Typically, we like to go for a 1 risk, 3 reward. So in this case, if I were to sell both here at 120, 1270.5, okay, it's a $160 reward, okay, and I would be looking at possibly just putting it underneath the LIS here at 1269.4. So in this case, we're looking at we could lose $60 or make 160. So pretty close, right? So it's pretty close to that 1 to 3. So if you wanted to, you could also move this up to here as your stop, okay? In this case, I have a little bit higher tolerance, okay? So I'm able to put my stop wherever is needed. In this case, let's put it under. So another way that we use here at Trendy Options is we're going to use this chaotic candle. That's what I call it. We know that price in an uptrend likes to bounce at the 50 with a stop below the 61.8. So therefore, I'm going to put my stop just right under the 61.8, and then I'm going to leave it alone. And that's a demonstration of how I would set up for the LIS in this event. Let's go over and look at some more futures. Here is the YM. We can do the same thing here. Let's look at the NQ. We can do the same thing here. So if we come over here and we were to use the LIS, we're going to do the same thing. Let's find our 1400 close. Right here. Gonna make it pink. Okay. Now, I am long one position, okay? And if I wanted to, things don't look so fun, do they? But what I can do is get out because I can project that we are going to move into the LIS. So let's sell before we get there. I can lessen my damage over here. Okay. And let's make sure this is on the right number. So we could sell one, say we're going to sell it here, right? And then I can set up an order to go short as well. Okay, and let's offset some of these losses. So I'm going to get in at 2736.32. Okay, 7236. Okay, right in here. And so we can bring this cell all the way up here. It's almost to the LIS. We want it just underneath there. Sorry, I was like messing around there. Oh, right there. Okay. We're almost going to have these conditionally right at the same mark here. So then I want to sell 3 positions right here. Okay. But the way I want to do it is I want to set it up with a bracket. Okay. So in this scenario, I want to go here. And let's say what do I want to go for? Where do I think it's going? We'll find that here in a second. So my stop, I'm going to make this, let's just say 50 points. Okay. And my reward, let's just say 200. Okay. All right. And we want to go short. So we're going to come to the right side here. Let's find 7236. Okay. And there's our order. Looking at it, here's our stop, and there's our reward. Okay. To go here, to figure out how much I could lose, we would roll up to, well, if you want to, we can go to this side. You could see that, well, it's showing, actually, it's showing the P&L from, yeah. Okay, we'd buy back, we'd lose 4,000 there, it looks like. If it were to, no, this P&L, sorry, this P&L is set to my position right now, okay? But anyways, this is what it looks like. Okay, I'm gonna get out of the long position. I won't have as much loss there, and then I'll go short as soon as we come up to the LIS here. Okay, and we're just gonna leave that there. Let's go over to oil. Okay, same thing here. Nice little move. Let's find the 5-minute close. Sorry, yeah, 1400 5-minute close is right here. The quickest way is actually just to look at the time here and go straight up. Let's move this. Okay, it's right there. We're above the LIS. There you go, just like that. And if given the opportunity, because we're above here, and there is a zone here, if given the opportunity, we will go long here. How do we set this up? It's easy. Let's go with 4 contracts here on oil. Every tick is $10. In this case, it would be $40. Let's go ahead and set up trigger with bracket. Okay, just looking for a quick scalp up here to 66.23. Okay, and 65.73, and I'm gonna come up about 5 cents from there. Okay, just like that. And that's what it looks like. Okay, just like that. Now on this, I don't want price to come all the way down here $1. It's $1,000, so the delta is $1 that I'm looking at right here. Be $1,000 a dollar that goes against me. So in this case, it'd be 4 grand. To the upside, if I get 66.80, that's about 4 grand. But I want my reward to be much more than my risk. So I'm going to put my stop just underneath the LIS there. Okay. So now I've defined here my loss. So we're looking at, in this case, it is 65.67. Just subtract from, there to there. That gives you your risk. And then our reward, obviously, is up here at about almost 4,000. Okay. where I'd expect to have some resistance in this name. Easy. It's going to be right here. You can see it's pulling away from there actually. And then our next resistance we're looking at here. Okay. Overall, this is our setup. Okay. So just come back to these. This will be the first portion of this video, and we'll look at our results probably into tomorrow night. Thanks for watching. If you have any questions, please reach out to me. Again, LIS is pretty simple. 5 o'clock close, cash close on these futures. If you're up above the line in the sand, you go long for a scalp. And if you're below the line in the sand, you go short for a scalp. Once given the opportunity when it comes to the line in the sand.